My name is Shawn Khunkhun. I am the CEO, President, and Director of Dolly Varden Silver, and I'm very happy today to share the value proposition, which is Dolly Varden. And I just want to start off by saying that I've been working with mining companies for the past 20 years. I've been all over the world, mainly focused in precious metals, and this opportunity that I'm about to present is really what I would describe as a unicorn opportunity in that we've identified a primary silver opportunity in a safe jurisdiction. So I'm delighted to present this opportunity to you. I will be making some forward-looking statements throughout the presentation. In mining, like real estate, it's location, 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 and we are in the Golden Triangle, and it's very important to understand the history of the Golden Triangle, and I'll bring you up to speed what it was, where we are, and where we're going. Essentially, this is the richest 20 kilometers on the planet for gold and silver mineralization. So if I drew a circle from KSM around Brucejack, it is the richest 20 kilometers for gold and silver mineralization on anywhere on the planet Earth. And the history of the area goes back 100 years. So if we start here with the Premier Mine, this was one of the richest gold and silver mines in operation in and around the 1920s. So there was 2 million ounces of gold produced and 45 million ounces of silver. Fast forward to the discovery of Assay Creek, which was in 1989. And just to give you an understanding here, in the first 100 years in the Golden Triangle, there was 5 million ounces of gold discovered in the first 100 years. In the last 30 years, there's been 150 million additional ounces of gold discovered. Now, outside of gold, there's a lot of copper, there's a lot of other byproduct metals, but the other notable metal that's been discovered in the Golden Triangle is there's been 1 billion ounces of silver discovered in the Golden Triangle. So whether it's Assay Creek, which produced 200 million ounces of silver at over 2,400 grams per ton, or it's the Brucejack mine, which is operated today by Newmont, there is a strong and rich silver history. And what often starts as a silver mine, so the Brucejack project was in a company called Silver Standard, before it was spun out to Pretium and then subsequently acquired by Newcrest for $3 billion before Newcrest being acquired by Newmont. These start off as silver deposits, Premier, Assay, and Brucejack, and then they go on to be some of the greatest gold deposits the world knows. And what we're looking at in the southern part of the Golden Triangle at Dolly Varden is the potential for something like an Assay, like a Premier, like a Brucejack, what's starting as a silver mine, we believe can turn into a very, very large gold system. So we've outlined a number of transactions on the right-hand side of the page. It's very, very important when you're a junior company to be in the shadow of the majors. So it's a great sign of validation that the world's largest gold producers here, in addition to the precious metals richness in the Golden Triangle. As you move further north, you've got the Red Chris mine, and you also have Teck with a big presence in the Golden Triangle. So much of a junior is the people. When you have a pre-revenue company, it's the experience, the track record, the success of the team. And so we have a very, very strong technical team at Dolly Varden. Our technical committee is head up by Michael Henriksen. Michael was with Newmont for 10 years as their head structural geologist. The other member of the technical committee is Kurt Allen. Kurt Allen is currently the vice president of exploration for Hecla Mining. So the world's fastest growing established silver producer, a company that's been around since 1891. We're leveraging the expertise of Kurt and the team at Hecla. And to round out the team, we have a Stewart native. So our project is 25 kilometers south of Stewart, BC. We have a third generation geologist, third generation miner, who is part of one of the most notable and distinguished Canadian Hall of Fame mining families. Rob's uncle Don was inducted into the Canadian Mining Hall of Fame. And his cousin Catherine is the chair of Kinross. His other cousin Bruce just sold Sabina to B2 Gold. Rob himself has had 5 successful exits in the junior mining industry. So we've got an incredible technical team, but beyond the science, we've also got incredible expertise in banking. Tim Clark, who's a Boston resident, a former institutional salesman, is on our board. Ivan Bebic, who's an incredible entrepreneur and had success and successful takeovers in junior mining. So we've got a great team, a well-rounded team, a lot of experience, and that's led to one of the best cap tables I've ever put together in my 20-year career, which is 50% held by institutional investors. So these are investors like Fidelity, like Sprott, like US Global. Outside of the 50% institutional ownership, we've got 2 corporates that own about 35% of the company, including Hecla, which is the, as I mentioned, the fastest growing established silver producer in the world. And then we've got Mr. Eric Sprott at 10%. So there's only 8% of the company in the hands of the public. And so it's something that you don't often see with a company, but incredible structure. That's the share price performance up to May 15th. So, we've got roughly a $300 million valuation. We've got about $20 million in the bank. We are covered by the firms listed on the page there: Haywood, Raymond James, Research Capital. Stock trades incredibly well. It's well covered. And again, this is the foundation of the business. We've got aligned shareholders that are giving us an opportunity to build a business, and this underpins that structure. In terms of our local communities, in terms of our indigenous groups that we cover, and this slide. We've got it titled as community, but it could also be called certainty, because that's what the Nisga'a bring to the project. They bring certainty. So the Nisga'a are a group in Northwest BC that signed a modern treaty in 1998. And they're a sophisticated First Nations group. They're a First Nations group that make up a third of our workforce. They're a First Nations group that they have about 80% unemployment amongst their people. So they're very keen for industry, for companies like Dolly Varden to advance projects, to create jobs, and we're looking to have win-win situations. Beyond Dolly Varden, I'm a member of the BC Regional Mining Alliance, which is a partnership between First Nations, in this case Nisga'a, the BC government, and a company like Dolly Varden. Other companies that are also involved are Skeena, Ascot, so prominent players in the Golden Triangle. And essentially, we created the organization to let the world know that BC's open for business, and specifically the Nisga'a are bringing certainty to this region. Listen, I inherited incredible history, and it's one of the reasons 4 years ago I took over the company. I took over Dolly Varden as CEO on February 18th, 2020. At the time, the company had a $20 million valuation, and we had 44 million ounces of silver in the ground. Today, I've grown that company, and despite the last 2 months, we've had a very difficult period for juniors. And despite that, we've seen the market cap grow by 15 times, and the share price has appreciated by over 600%. So our shareholders have done very well in a very difficult and challenging market. And one of the reasons for that is, A, the team, B, the shareholders, but this is an incredibly prospective, rich area. This was the richest silver mine in the British Empire when it was producing in and around 1919. And then fast forward to the modern mine of Torbrit, it was Canada's 3rd largest silver producer, producing grades of 466 grams per ton at Torbrit and over 1,100 grams per ton at the historic Dolly Varden silver mine. So we've got a rich history of production. But getting back to, as important as location is in mining, so is infrastructure. And the fact that we've got roads, um, tidewater access, hydroelectrical power that's coming into the region, these are the things that are going to make the project economic. And in addition to the mineral inventory, where we've got in all categories approximately 150 million ounces of silver equivalent, in addition to that large high grade inventory, and this is an inventory that's average grade is roughly 420 grams per ton silver EQ, where our peers are sub 200. So we're twice the grade of our peers, and we've got, again, a lot of prospectivity and tremendous infrastructure. Our exploration costs are sub $400 a meter all in on the drilling side. And the reason for that is we've got a road to site, we've got access to tidewater, we've got a regional airport that we can access. You can see Highway 37 just to the north, so incredible infrastructure. In addition to Hecla being a shareholder, in addition to Hecla having a representative on the board and a representative on the technical committee, they also own a large mineral property next door. So, and a little bit about that history, they also actually had made a hostile takeover attempt previously. This gives you an idea. I've been talking about the Golden Triangle and silver deposits and silver mines turning into large gold systems. This is a theme that we're seeing at Dolly Varden. So if you look at the southern part of the property, the old historic Dolly Varden silver mine, the Torbrit mine, the new discoveries of Wolf, Moose, etc., we're moving from a 99% silver system in the south to a silver gold system in the north to a big gold system here further north. So that gives you an idea in terms of zonation and metal distribution. Silver in the south, moving towards silver gold, and then gold in the north. I would love to sit here and say, we brought in some, AI exploration, and that's what's unlocked all the discovery potential. The reality is it's good old-fashioned geology. Yes, we've got 2024 technology, we've got the geochem, the geophysics, but essentially this was a project. All it needed was a dedicated team that were focused on looking at where mineralization was open. Where can we expand and extend deposits? Is there a periodicity? Is there a repeating pattern of the projects? And so what we've used a triangulated approach of the geology, the geochem, and the geophysics, and that's led to some new discoveries. So just to touch on the success we had in 2023, and I also want to go back to 2022. Again, this is one of the richest gold mining and silver mining camps on the planet, and back to back, 2022 and 2023, Dolly Varden Silver had made the best discovery news in all of the Golden Triangle, back to back. So we had some significant programs. We've run about 100,000 meters of drilling since our last 43-101. So some of the discoveries we've made post 43-101, post 150 million ounce silver that I speak of, have not been incorporated in that estimate. And so, the way I'd like the viewer or the audience to look at this opportunity is take the Torbrit deposit as one example. Torbrit has produced about 20 million ounces. There's another 35 million ounces left intact. So it's a 50 million ounce silver deposit. How many more 50 million ounce silver deposits are there on the land package? We think we have one in Wolf. We are testing to see if Moose, Chance, and Ace Galena can also be large systems, as we are both at North Star. Now, in addition to the pure silver, as we move onto the western side of the property, we've got a gold-dominant Homestake deposit, and we are drill testing Red Point to see if it's another Homestake. So the question there is, Homestake is a million-ounce gold deposit. How many more million-ounce gold deposits are on the property? So this is a story about growth. This is a story about expansion. And one of the best examples of that expansion was drilled by our exploration manager, Amanda Bennett, who was the first explorer to drill below the sedimentary cap, and she's expanded the Wolf deposit to about 1 kilometer of strike length. And what's unique about Dolly Varden is, in addition to the grade, you're drilling it over 26, 29 meters. So exceptional widths, high grades. It's open to the northeast. It's open to the southwest. And, our goal here this year is a third of our planned 25,000 meter drill program is here to try to expand and extend this deposit, also to delineate a resource. Now, in addition to Wolf, Wolf is only 1.5 kilometers away from the big Torbrit deposit, the big mine on the property. So is there a potential to connect these two deposits? That's one of the themes that you're going to see throughout this presentation about connecting deposits. The other theme, as I mentioned, is silver, moving to silver gold onto gold. A great example of that is up at the Homestake Silver deposit, where in 2023 we drilled 93 meters of 357 grams per ton silver equivalent. Now, that is an exceptional drill intercept. And if we were to break it down, what makes up that silver equivalent? It's 100% precious metals. It's 212 grams per ton of silver over 93 meters and 1.74 grams per ton gold. So it's about 200 grams of silver, about 2 gram gold. Even if you just had one of those numbers with over 93 meters, that would be significant. Having them both makes this an exceptional, spectacular opportunity. But again, silver at Wolf, moving to silver gold at Homestake Silver. And then what was one of the most exciting aspects of the program last year was this step outside of the resource, where we drilled 12.5 meters of 80 grams of gold. And again, that's silver gold to pure gold. It's reminiscent of Brucejack. And, another significant hole to highlight here, 25 meters of 46 grams of gold. So I mentioned a third of our focus going into the Wolf deposit, delineating a resource, looking to further expand it. A third of the focus is going to be at this new gold zone and to see how large and how much tonnage we can build up. And also, can we connect Homestake Silver and Homestake Main? There's about 350 meters that separate the two deposits. So that's where our focus is going. Now, we just announced today is May 21st, that we've started a drill program, that we've got 3 rigs that are turning. Well, where are these rigs? So before we go on to the Wolf and before we go on to Homestake, where we're starting right now is in an area that I would describe as the most exciting basket of the drill program, which is the discovery potential. So we've got a rig at Chance. Now, there was a drill hole. What attracted me to Dolly Varden, I took over in 2020. There was a hole that was drilled that was never followed up on. This is the first time since I've taken over that we're following up. The hole that was drilled, that was published in 2019, was 488 grams of silver over 26.5 meters at Chance. So we have a better understanding of the plunge of mineralization on this trend at Kitsault, at Wolf, at Moose, at Chance. And so we're drilling that plunge right now. As we drill that plunge, we've got 1 rig at Chance, we've got 1 rig at Moose, and we're building on the success we had last year, and we're trying to show the market that we have 5 of these potential 50 million ounce silver deposits just on the southern side of the land package. And then the other rig is at North Star. And again, this is another potential large silver system. And so that is where the growth is going to come. And, we're off to an incredible start. One thing I should note is this is the earliest the company has ever started a drill program. What I've seen being up at the Golden Triangle, my first year being up there was 2018. I've seen the glaciers recede. I've seen them pull back. And what's evident is the fact that we had a crew up at the project in February this year. And, typically previous management teams hadn't started drilling until July. We had a team up at site prepping in April, and the drill is turning. So we're excited for this 25,000 meter drill program. We've had incredible success the last few seasons. We've got an incredible foundation of resources that's to build upon, and we've got this resource estimate here that we would like to update after this year's drilling. And again, it's there is in North America, there's about 170 gold projects that have at least 750,000 ounces of gold. So my point there is gold in and of itself is not rare. There's only 33 silver projects in North America that have over 25 million ounces of silver. So silver is a little bit more rare on a pure basis. But having both the silver and the gold, there's only 14. There's only 14 opportunities to play both gold and silver in one company. What differentiates Dolly Varden from the other 13 opportunities is this is the number one opportunity because of the grade. That's our differentiator. We're giving investors exposure to both silver and gold in a safe jurisdiction at grade. So with that concludes my presentation, and I'll turn it back over to you, Jasper.
Shawn, if you could walk us through your career.
Yeah, sure. So listen, I just celebrated, 20 years in the business. I started just before my 23rd birthday back in 2004. And by 2005, I was helping a gold company in central Canada buy a gold mine from Harmony Gold. So we bought a mine from Harmony. We paid $7.5 million. And within 6.5 years, that $7.5 million purchase turned into a company that had a $1.4 billion valuation. And during my 6.5 years with that company, I was responsible for leading $300 million in financings. So I learned a lot from that experience. I was a kid in my 20s. I was witnessing the price of gold go from 300 to 1900. What I learned is how to acquire, finance, and advance precious metals companies. And I've taken that knowledge and I've taken it throughout Canada into Quebec. I got behind a company in 2014. A company called Bonterra Resources landed on my lap in 2014. And within 18 months, the company had a $100 million valuation. And it had the likes of Kinross, Kirkland Lake, Osisko, Eric Sprott, and many other institutional investors. What I've really focused, the first 10 or 15 years in the business was on precious metals in Canada. And then about 5 years ago, I teamed up with explorer Rob McLeod, and we've been focused in the Yukon. We've been focused in Northwest BC. We've been focused in Alaska. It's all in our business. It's about competitive advantage. And, we do have a competitive advantage in the North because of our relationships with Indigenous groups in the North and, being explorers in the North, knowing how to, leverage that Northern expertise in dealing with some of the challenges in the North, like weather, like the remoteness, and overcoming those challenges and executing on time and on budget. And so we've built up an incredible team. And so today I've partnered with Frank Justra, and I work within the Fiore group of companies. We have 23 mining engineers. We have about a dozen geologists. and we have another half dozen capital markets experts. And so what we've evolved into one of the most dynamic groups for launching and advancing resource companies. And a good example of that is a company like West Red Lake, where we've brought over $100 million of capital in the last 12 months, and we've seen the market cap grow from 20 million to over 200 million as we advance the Madsen project in the Red Lake camp. So in addition to my CEO duties at Dolly Varden, I am working alongside Frank Justra and his team, and look, we're having a lot of fun, and we're bringing a lot of capital and science together, and it's that knowledge and that experience that we take to the projects like Dolly, and it's one of the reasons that the team has had so much success on the ground.
What was that particular drove you to join Dolly Varden? I think it was in 2020, if I'm right.
There was not just one reason. Number one, there was the idea that silver outperforms gold that I experienced. So despite building this big gold mining company, my shareholders and myself made more money speculating in silver in 6 months than we did building a gold mining company. So my lesson was get exposure to silver. And then as I went down the rabbit hole of investigating silver, and I learned that, only 28% of silver comes from primary mines, that, between Indian buying and solar, where it's now 35% of the market, I thought silver is going to be, up until this point in my career, the greatest investment opportunity. But the challenge that I had was trying to find a real silver opportunity. A lot of them are deep. A lot of them are more lead zinc. A lot of them are in places where they won't let you mine. So trying to find a real opportunity was very, very challenging. And I came across a number of circumstances that led to Dolly Varden trading at 37 cents a silver ounce in the ground. And so when I came into that opportunity, my bet was we were going to get to a minimum of 100 million ounces of silver, and we were going to get a minimum of $4 an ounce in the ground for it. So I thought, here's an opportunity to take a $20 million company to a $400 million valuation. That was my vision. Now, where we are today is we've added 50% more silver than I had originally sought out to do. And based on, money printing, debt levels, I think that $4 an ounce in the ground is understated, particularly at a time where the world's number one silver mining jurisdiction, Mexico, has brought in a lot of uncertainty around open pit mines. So I think it even further reinforces the safe jurisdiction premium that a company like Dolly Varden will experience in this cycle. And then I never wildly dreamed of making some of the big discoveries. But the question was, why Dolly Varden? It was, a rich mine in the past. And I thought by making some intelligent acquisitions, including the Homestake, and by bringing in the right science, this was a project that I think could trade at over $1 billion in the future.
How large is then your own equity stake in Dolly Varden?
It's a material position for me. This is a company that's got about a $300 million valuation. I think I've got about 5 million in exposure today. So for me, that's a very, very motivating factor. And again, if I'm right on silver, based on the leverage I have, based on the share position, it's going to significantly move higher. And so, yeah, I'm highly incentivized to move the company forward. But again, this is something that goes beyond the monetary reward for myself and my shareholders. This is about an opportunity. I think there's enough value in this project where we can construct an opportunity where our stakeholders, like the Nishka, can benefit from this project being advanced with the jobs, and beyond jobs. And so there's a lot more than just a pure monetary reward at this time in my life that is motivating me.
Super, I appreciate that. So then, how have you built the management team and the technical team at Dolly Varden?
I set out with a skills and experience matrix, and I tried to, the best analogy I could use is, if you think of a football team, whether it's, European football or North American football, but you need a complementary skill set. Our chairman, Darren Devine, who was a founder of K92, who, has a legal background, was a lawyer. Darren, practicing lawyer, Darren as our chair, and then as I mentioned, all the scientists, the mining engineers, the geologists, but not only with the technical expertise, but also the business acumen of negotiating contracts, selling companies to larger entities, and banking, marketing, all of those. So we were looking for best in class people at their respective positions, and I'm humbled that I get to work with one of the most talented teams that I've ever been around in my 20-year career.
Your largest shareholder is Fury Gold Mines with 90% shareholding following your acquisition of the Homestake Ridge project. They've divested a couple of million shares earlier this year. So my question is, what are their plans for the equity interest, and also how are your relationship with them?
So it's really important to go back and to understand. And I'll take you back to a conversation I had with Fury about 2 years ago. And the conversation was, you had these two companies in the Golden Triangle that on their own were too small. They were uneconomic on their own. And so when I approached Tim Clark and Ivan Bebic and Michael Henriksen and the team at Fury, my plan, my proposal was, let's partner together. It wasn't a divestment. It was an investment into Dolly and our team. And let's together go out and advance this opportunity. So when we signed the deal, Dolly Varden parted with $5 million in cash, and we issued about 37% of our treasury to Fury. Now, there's been two occasions where me and Tim Clark have gotten together, we've worked together, and we've brought in accretive investors. We brought in two U.S. institutions, one in Boston, in Fidelity, and the other one on the West Coast that I won't name at this time. But we brought in two institutional investors, and it was agreed upon that these would be investors that could help it bring the capital to advance the project. So, those were situations where Fury recognized as a board and as a management team that Dolly Varden was going higher, but it needed the benefit of these institutional investors to lead it forward. And then as another win-win situation, Fury could also use the proceeds of those sales, to, number one, unlock the value in their shares, but number two, to advance their efforts in Quebec. So it was really a win-win-win scenario. And, I think that unless there was another circumstance in the future where another accretive player came to us, whether it's an outright sale of the company or it's a specific investment, I think Fury, if they thought it would be good they're the largest shareholder, if it would be good for their 19% holdings, they would be supportive of future transactions. But I think at this point, they're well-funded, they're well-managed, they're extremely undervalued, and I would think they will want to hold on to as much of this position unless it was deemed accretive for them to part with some or all of it.
You have 21 million Canadian in the treasury. So how much are you dedicating to this year's exploration program?
That's a great question. And so we've started with a phase 1 program. which, it'll be somewhere in the neighborhood of about a $12.5 million spend. And then we'll assess from there, what we want to do. Exploration's a very fluid business, and it's important to be able to be, quick on your toes in terms of, drilling more based on success. And so more isn't always better. Like last year, we started with a 42,000 meter program. It ended up turning into a 51,000 meter program. The year before, we started with 30,000 meters and ended up being 37 and a half. So, we have increased programs in the past. This year, we've took a very thoughtful, surgical approach to the exploration. And again, I identified in my presentation, the Wolf drilling, the Homestake drilling, and then the property-wide exploration discovery focused drilling. And depending upon how that drilling goes, we may make a decision at some point in the summer, July or August, that we want to expand from 3 rigs to a 4th or a 5th, like we have in previous seasons, and add meters.
So what's your all-in drilling cost per meter?
$400.
$400. That's Canadian or US?
Canadian.
And then, so what do you expect your quarterly burn rate, your G&A, just G&A, to be?
Well, listen, I've run public companies for $50,000 for the year, with audit, with exchange, transfer fees, everything, right? So, we have the opportunity, if we need to hunker down and, we go through some type of a nuclear winter, Dolly Varden can survive for decades. But, I'm doing just the opposite right now. I'm on myself, or my team is on an airplane. My VPX right now is in London, about to present to some of the largest institutions in the world, and none of them own Dolly Varden today. And so that's a great opportunity there. So, to answer your question, we think now is the time. If you look at the price of silver over the last 4 years, it's gone up to this $30 level, and it's finally broken out. And if you look at Dolly Varden, we've done the same thing at around the $1.20 Canadian price level. So we've got 2 breakouts occurring, one on the price of the metal and one on Dolly Varden. Plus, we're making discoveries. So this is the time for us to go out all around the world. And one of the reasons I'm doing this video today with you is to share the value proposition. But if we had to, we could reduce the spend. We could, so it really varies, as does exploration. Now to answer your question, we have runway for the next 12 months at this pace and at this pace of spend.
So, Rob, could you walk us through your career?
Yeah. I got into geology in high school. Actually, our high school was one that offered a geology course, which was kind of rare. And then went to University of British Columbia, and during the summers there, I worked for Khunkhun, and Khunkhun had properties in the Northwest Territories. So working up in the Northwest Territories, and then the second half of university, the later years, I worked my summers up in the Golden Triangle of British Columbia. So it's good to be back working there again. And then after graduation, I went straight to work and did various jobs again in the Golden Triangle, in all sorts of commodities, including gold, lead, zinc, and diamonds. Then most recently, I went and worked with Platinum Group Metals, and we were looking for platinum in Eastern Canada as well as South Africa on the Bushveld. And then I spent many years working in Mexico and Peru as well. I lived in Peru for a few years, working on big copper porphyry systems there and silver veins. So I have a broad range of experience internationally and locally across Canada, and everything from prospecting, going out and trying to prove a concept in areas that hadn't even been mapped by the government yet, to full feasibility stage copper porphyry systems in Peru. So my range of experience is broad, and I've also concentrated a lot on the quality assurance and quality control. So, when you're doing your sampling and drilling and all that, you have all your check assays and your standards and blanks, and that's to make sure that that no numbers are misreported and that you're reporting exactly what you're getting out of the ground. Yeah, and then most recently in 2017, I started with Dolly Varden Silver. So it's been almost 7 years that.
What made you join Dolly Varden Silver?
Well, actually, Dolly Varden Silver is interesting. At the time I was working for a company that had several smaller junior mining companies working under it. So we work here. It's called an umbrella company, and so the smaller junior explorers work under these umbrella companies, and that way they share a legal team and they share the accounting and all that, so it keeps the cost down between companies. And one of the companies I was working for, they had common shareholders with Dolly Varden that already existed. So this was in 2017. Dolly Varden started in 2011, and they were looking for an improvement to the current management position. So we took it on and then really got into it and started really increasing the amount of meters drilled, and through the flow through money raised that we can do here in Canada, we got the money to do a lot of drilling, and we were able to test out a lot of theories that were just on paper at first, but they needed to be drilled to prove them, and a few of them became successful. We found new deposits, within 50 meters of a 100-year-old mining camp, and then in 2020, Shawn Khunkhun took over that management role as CEO. I stayed on as a technical, and then working together, we've grown it from a $20 million market cap in 2020 to now almost $300 million market cap. So just to finish that off, we are not founders, and it came to us, and we saw the opportunity for this to be a growth story, and we've done that through exploration, through discovery on the drill bit, as well as acquisition. So you saw Dolly Varden and its position within this whole geological belt within the Gold Triangle.
So could you explain the geologic setting of the Kitsault Valley project?
Yeah, sure. The geological setting, it's a setting that occurred during the Jurassic period of time. So it's a time when the plate tectonics in this part of British Columbia, the west coast, instead of plates subducting and being pushed together, there was a bit of a release in tension, a shift in direction. And what happened during that time is there was a release of pressure. And so a lot of basins were forming and volcanoes were erupting because there were more pathways for fluids to come up and magma to come up. And within these basins and the structures that formed, the faults that formed along those basins, sediments were deposited, volcanics were deposited, and at the same time, mineralizing fluids were coming up. And so within the whole Golden Triangle, this northwestern part of British Columbia, there's a package of rocks called the Hazelton Formation, which is basically that package of rocks. There's the lower and the upper. And that's what was deposited during that, we call it the Assay Rift period. So it's a time when there was a release, and all the mineralization and the mines within the Golden Triangle are deposited within that time frame. And the mineralization is from that Jurassic period. There is younger mineralization as well, but a lot of that's remobilization as well. So it was quite a dynamic environment. If we're comparing to other deposits in the Golden Triangle, Dolly Varden was within a volcanic environment. So the age of mineralization is similar to what we see at Eskay Creek, which was one of the richest gold and silver mines in the world at the time. But it was in a different environment. It was within a volcanic environment. So what we have is a number of different styles of mineralization but it all came in during that time.
Could you share where you see the big bulk porphyry? You have the slide. It's a few slides away. Oh yeah, here it is.
Yeah, right here.
How far away is it really from? And is it on your land package?
Yeah, so just to get ourselves oriented here, this area in green, that's the Hazelton Formation that I was talking about. And then the red line that you see along the edge of that is what we call we call it the red line theory here. And what it is it's basically marks the bottom layer of the Hazelton Formation. So it's everything above that red line in the stratigraphy. That's where all the mineralization occurs. And you can see all these little white dots, as well as our deposits marked in blue and our major showings marked in white. They're all within that green package. And then big bulk is also part of that mineralizing event. At the same time as these fluids were coming up, there were also intrusives coming up, and some of those within the Golden Triangle were mineralized. So the big bulk is our Jurassic aged intrusive. So it's a copper gold porphyry system. It's the same age and suite of rocks that the large KSM deposits further north within the main body of the Golden Triangle are they're the same age and style of mineralization. And it's about 5 kilometers between our main Kitsault Valley block, which is all of this here. Just for reference scale, this line here shows the 15-kilometer trend of Hazelton rocks that we have. And then, just again, it's hosted in the Hazelton Formation, that green package of rocks. It's about 1.5 kilometers across and about 5 kilometers from the deposits at Torbrit.
So, do you think the big bulk porphyry is the feeder of the system, or what was your thesis?
Yeah, well, it's either that intrusive itself is, or quite often they occur in clusters. So there may be one off to the west here, we think, because we have a lot of high temperature alteration and stockwork that you often see associated with porphyry systems off to the west here. But having said that, there's also after the Hazelton was deposited and all those mineralizing events kind of slowed down, then we went back to compression. So there's a lot of thrust faulting here too. So yes, big bulk could have been slid over through thrust faulting, and it could be the source, that particular intrusive or part of that intrusive suite, because big bulk is the most northern one that we have, but there's another 3 going to the south, and then it's a different age, but it's along the same trend as the Kitsault molybdenum mine. That was a mine that ran from the 1960s to the 1980s. So that's again a porphyry system along that that cluster of intrusives over a wide range of time periods.
What do you know of the big bulk deposit? Is there any historic drilling on the porphyry, or?
Yeah, we have. Well, we just earlier this year we consolidated the property, so you can see the old boundary is this little thin line within that. But we had the northern portion here. Libero Copper had the southern portion optioned off of the owner, and we assume that option now. So now we have the whole 100% of this porphyry system. The major historic data is from Anglo. They drilled 3 holes on our portion in 2019, and then Libero drilled a series of holes in 2021 under that option. And there's within those holes, there's about you have up to 50 meters, 100 meters of 0.3% copper equivalent, and that's between copper and gold. And then on our section, you'll have areas where the stockwork increases and you get up to 10 meters of 4 grams gold. So we know that there's mineralization within the system, or metals, I should say. With these porphyry systems, quite often you have to have the whole thing together, because there's different shells of alteration, and then you have to home in on that central portion where there's more stockwork and more sulfides. And so the drilling done so far, the alteration patterns and the sort of the footprint that we see shows that there's mineralization, but it also shows that we're slightly outside of that main core area. And on an airborne geophysics map, I don't think I have it on this presentation, but there's a large chargeability anomaly sitting in the center, and that has not been drilled. So that's what we're looking to test. But first we have to compile all these different years of work and put together a model. But so far it looks like it's an intrusive. It has the usual shells of alteration. It's tipped on its side a bit due to later folding, and I think we have to go a little bit more towards the center. That's where where the model would tell us that the better part of the mineralization could be.
Your plan is, in other words, to try to vector into the potassic core this year. How many holes are you planning to put in the big bulk porphyry?
Well, we just consolidated it, so we had plans to try and do like one hole just to test the theory, 1 or 2 holes, but we still have to go through the exploration permit application. So drilling it this year might not be possible. We'll see. Sometimes it takes 6 months, and by then our season has ended. So if we don't get to it this September, we'll have our permit in hand come the spring, and then we can drill it next year.
So then if we switch over to the current MRE, which is, by the way, it's quite good to know, it's from the drilling data up to 2019, so it's not very current. But if we look at that, is all of the Dolly Varden property, the resources there, coming from the Torbrit deposit, or is some from elsewhere?
Yeah, the Dolly Varden portion here, so that's a silver resource, not silver equivalent. That's important to note. 80% of it comes from the Torbrit deposit, and then the other 3 deposit that make up the other 20% is Wolf, North Star, and Dolly Varden vein itself. So the bulk of it comes from the Torbrit deposit, and that's a style of mineralization that is wider and sits at about a 35-degree dip to the north, and it's a combination of layered volcanogenic systems similar to what's seen at Eskay Creek, and then it's later cross-cut by epithermal silver-bearing veins. But there has been past production on that. There's about 18 million ounces were mined at Torbrit, and in our resource of this 32 in the indicated and 11 in the inferred, if you combine that just for scale wise, about 35 million ounces come from Torbrit itself.
Would you say that Torbrit is fully sort of explored, or more or less? At least the low-hanging fruits have been taken out.
Yeah. Torbrit has been over the last few years. We've always combined our exploration drilling about 50% between exploration and 50% near resources. So we did not drill near Torbrit last year because the previous years we had done step outs, and we still kept finding that horizon, and there was still mineralization there. And then we would have to infill. Once you do a step out, then you have to do some infill to be able to bring that result into the resource. You can't just base a number of tons on one hole, right? So we've done that at Torbrit, and I think in terms of low hanging fruit, and even the not so low hanging fruit, we've pretty much defined the extents of that body. But then, like I said, these bodies form within basins, and the next basin up on the Kitsault Valley trend is bound by the Wolf vein, and so that's our next deposit that we're working on to expand. And and infill.
Could you give us a quick overview of Wolf? What kind of grades do you have? What metals, mineralogy, veins, the thickness of them, geometry of the ore body or resource, everything really?
Yeah, so the Wolf vein was discovered in the 1920s, the same time that the Dolly Varden vein was found, at the same time Torbrit was found. So that was a big prospecting rush. And now that we've sort of come in here in this part of the Golden Triangle, and it's kind of we call it the rebirth of the Golden Triangle. So that's starting a few years back, Skeena with Eskay Creek, they revitalized all these old mining camps because we now have new methods of 3D modeling and things like that. So just Wolf started off here. There are some tunnels into that. It's in this place up in here, it's made up of 3 veins that are about 5 to 10 meters wide. And then with our 3D modeling and looking at the old data, Amanda here on the slide, she's our geologist that just came on in 2021, and she saw the opportunity and a sort of a geometry of a plunge, because quite often these veins have mineralization on a plunge, and that plunge is determined by sort of structural forces on the vein. So if you have an area where there's a bend and then there's a movement, then you get a pocket opening up. So that was defined. We just started to do large step outs, like 95 meters, 55 meters, 200 meter step outs, and we kept hitting it all the way down. So we've now defined the Wolf vein from the upper end to the sort of the western side, because we're looking north here. It's about 950 meters along this plunge line. And last year, as we get towards the center of the valley, which is coincident with the center of a fold and those basin bounding structures, we're seeing that it's remaining a wide vein. So, 18 meters, 29, 27 meters type thickness intercepts. The true thickness is probably about 70% of this. So we're talking veins that are 10 to 20 meters wide on average. And because of that width, we can use bulk underground mining methods, which are a lower cost underground mining method. And so we're starting to look at where can we get those widths, and that whole plunge line that we've defined is within that wider sort of, like I say, 5 to 10 true width. And the average grade is about 300 grams per ton silver. We do usually have within that, it's not just a single vein, it's a number of breccias coming up, and breccia veins we call them. And so the more pulses you get, the higher the grade. And there's quite often one pulse that we see running up through the whole thing, and that generally runs over a kilogram of silver, up to 2 kilograms. And on rare occasions, on a little splay vein here, we have 23 kilograms, so 23,000 grams per ton silver. And you can see it's 35 centimeters, down here half a meter, up to a meter. But it's we would not follow that high grade breccia. What we're looking at is taking the whole vein out, and that way that grade gets spread out among that, over that wider width, and keeps our mining cost down, is what we're looking at. And so those various pulses, they're it's mainly silica. There's some barite in some locations, which is what you'll find in these basin bounding structural veins. The mineralization is pyrargyrite, so ruby silver, we call that. They're all low temperature silver minerals. And then a few of the breccias have native silver in them. So spectacular patches of just native silver running through there. So they're all minerals that are easily liberated. There's a whole suite of silver sulfur salts too that come in. We've done metallurgical testing at Torbrit with similar mineralogy, and there's the past production. So we know our silver recoveries are in the mid to upper 80s. There are some base metals involved. lead and zinc, about 0.5% at Torbrit. At Wolf, as we get deeper, that increases. So on these last 3 holes we drilled last summer, you can see here we're stating silver equivalents. About 85% of that is silver, but we're getting up to 1% to 5% lead and zinc, which will give us some credits, even though the recovery in a silver circuit is maybe 70% for the lead and zinc. And then other than the geometry of this vein being, having that plunge, just in general terms, it's on a structure that cross-cuts the valley. So we're noticing that these veins are occurring on these cross-cutting structures, and they have a periodicity of about, just put it right here, this is sort of a long section of the whole valley. At the Torbrit deposit, we have a cross-cutting vein called the Kitsault vein. It's the same orientation as the Wolf vein. And then the next step up, 1.5 kilometers later, is a new, well, it's not a new vein. It was also found in the 20s, but there's just a little surface showing. It's another 1.5 kilometers up. And last year we drilled 1 hole into that and got 712 grams per ton silver, over 2 meters, I believe it was. And so we'll take the geometry that we learned at Wolf and apply that at Moose. And this year we'll follow that plunge line down and hopefully be able to expand on the Moose vein. So all I'm saying is, in the long valley view here, we have the main valley structure here, which hosts the Homestake Main and Homestake Silver deposits along this northwest direction. And then across that, we have a series of structures that create these basins. And that's where we get these Wolf and Moose and various other veins. And the Dolly Varden vein is along that same cross-cutting orientation.
We'll start with a question that I should ask you before, but if you just could quickly give us a broad overview of this year's exploration program. You're drilling 25,000 meters, how you're distributing that.
Yeah, sure. This is the same valley picture, sort of highlighting where we're going to be drilling this year. Last year we had a huge program, 51,000 meters, one of the largest programs in the Golden Triangle last year. This year, our initial phase, we have 25,000 meters planned. We'll be concentrating on 3 sort of areas. So the overall split is about half between the Homestake area and the silver on the Dolly Varden area. And then it'll be split about 1/3 drilling around Homestake Silver, which we had some new discoveries last year, and then 1/3 at Dolly Varden. So that's mainly around the Wolf deposit, where we will be following up on those deep intercepts that were on that last section, as well as doing infill. So, we have a series of holes showing that this plunge goes down to depth, but now we need to see how thick it is, right? So now from those intercepts, we have to do step outs in order to bring it into the upcoming resource estimate. And then the last third is just property-wide exploration. So, expanding on Moose falls under that. Then we have another series of showings. Chance, Ace Galena, Red Point is a gold prospect. So those, they'll all get a few 1,000 meters allocated to them to either expand out on last year's initial intercepts or test some theories. Because, just for example, Moose, using that same 1.5 kilometer sort of interval, there's alteration coming out in this green package from underneath the sedimentary pack. So there's a few holes that we'll be testing our theory to see if that mineralization continues underneath that sedimentary cap. So it'll be a little more concentrated this year. Some of the work is just towards being able to bring newly discovered ounces into a resource estimate. And then some of the work is exploration.
Why are you not expanding northeast, i.e. the right there?
This way?
Yeah, close to surface. Or at least this
we
year.
we do have a couple of holes planned up here because this really high grade intercept needs some follow up because remember I said that's 3 veins, so you're looking at this from the side. So the vein that had that 23,000 gram per ton silver is a little bit closer to us, and it's still open towards the northeast. So yeah, we do have a couple of holes planned up in here, and then the rest of the holes is seeing what happens down here, because we notice it is getting wider. There's more base metals involved, and this is the center of the valley here. So that structure that comes down from Homestake Ridge is somewhere out here. And what we're anticipating or hoping is that when this structure and the one coming from the north cross each other, it will create an area where there might be a blowout. That's the theory that we'll be testing. That's the main question that we want to answer when we do some step out drilling here. And then the other part of it is that infill I'm talking about. We have very widely spaced intercepts, so we need to fill in these gaps. We have to go above and below those intercepts to see how thick it is, and then how if that width maintains itself. So that we call it infill, but it's really expanding to see how high the dimensions of that higher grade
the vertical height, or
the vertical sense.
Yeah.
So yeah, we do have a couple of holes planned up in this area.
Okay, but then so that blowout that you're talking about, that would be would that be in grade or in depth width?
It's both. Where like I say, if you have a structure like this and it moves, it stays fairly tight, right? But if you have a little bend in it and you move it, you can see there's a pocket that opens up, right? So what we're trying to do is figure out how thick this pocket is and what happens within that pocket, because it's sort of a low pressure area. You have more breccias that will deposit in that zone. So it is wider, but it also is the area that carries higher grade, because you have more room for deposition within that open area.
And then, so how will directional drilling benefit you as you're going deeper at Wolf?
Yeah, that's something new that we're trying this year, because near surface things don't deviate as much. When you're drilling a hole, just the spinning of the bit causes the hole to veer to the left, usually, or counterclockwise, in the northern hemisphere. And then also just the weight of the rods cause it to dip. And we know the average of that. So when we plan our holes, we don't aim them directly at our target. We aim them a few degrees off, because we know they're going to bend a certain way. But once you get deeper and you start crossing different boundaries, like we're going to put the directional drilling will be based off of what we call a mother hole. So we drill a mother hole down through the sediment, and then once you get to close, then you attach your directional instrument, and you can point it exactly at where you want. So there's 2 reasons that we're doing directional drilling down here. The first one is that we can pinpoint exactly where we hit. So if we want to get a hole halfway between this intercept and this intercept, which are maybe 70 meters apart, we want one at 35 meters so that we can get the confidence that the mineralization is continuous. If the deviation goes the wrong way, now suddenly we're 10 meters from one hole and 60 meters from another. So it's not very helpful. So it's, number one, it directs the drill exactly where you want to have your pierce point on the vein. And number two, by having that mother hole, you don't have to re-drill the first 300 meters every time. So you go back down and then you steer in a different direction. So from one hole, you can do 4 different holes, and it saves you a lot of drilling through that sedimentary cover.
And then, so let's move to Homestake Ridge.
Yeah.
And maybe we could start with, how has the Homestake Ridge deposit changed since the MRE came out a few years ago?
Okay. Yeah. So just position wise, Homestake Ridge it's about 5 kilometers north of Wolf, and it is at a different orientation. So it's parallel the main basin structure that runs down the center of the valley. So in the next view, we'll be looking across that towards the southwest. So that this is the long section. We're looking west-southwest here. So north is over on the right-hand side of the picture. And this is Homestake Main, and this is Homestake Silver. The red is the outline of our mineralized envelopes. And within those mineralized envelopes, we create those to constrain our block model, which is what the resource is based on. And so we acquired Homestake Ridge from Fury Resources back in, or Fury Gold back in 2022. And the first thing we did was we went into Homestake Main, because that's where the majority of the gold ounces are. So about 800,000 ounces of gold were defined here in that older MRE. But the biggest risk in the acquisition, due to the nature of these, again, it's a similar type thing where you have a structure and you have breccias that have silica and pyrite, chalcopyrite, and then gold within that, coming up along those structural corridors. It's just oriented a different direction. So the first thing we did was infill drilling. So the reason we did that is because the majority of the gold ounces that we acquired were in the inferred category, and there's less. That's a much lower level of confidence. So when you're upgrading mineral resources, the idea is to increase your confidence. And when you advance even further and you do a PEA, a preliminary economic assessment, you want to have inferred and measured category on your mineralization. Anything in the inferred cannot be included in an economic assessment. So you want to upgrade all of your drilling to indicated and measured. So that's one thing that we wanted to do at Homestake Main, and that's first of all to validate the purchase, and second of all to increase our confidence. And then in the old mineral resource estimate, the average grade of the indicated, because it was concentrated along one of these higher grade plunges, was just over 7 grams per ton gold, and the inferred was just under 5 grams per ton gold. So we wanted to, increase the number of those higher grade ounces. And so the majority of the infill was along this central portion where you can see here we've defined in the pink, those are gold results along drill holes. There's a low angle plunge, so we not only increase the confidence. So I think we converted at least 50% of the inferred is now in the indicated. It also gave us an idea of the structure of Homestake Main, because we used oriented core drilling, which is different than directional drilling. Oriented core drilling means you drill a hole and you use some instrumentation to position the core how it is in true space, so that when you pull it out of the ground, you take measurements on it, and then you can get the true dip and azimuth of mineralized structure. So you know much better what's controlling your gold grades. So once we had that defined at Homestake Main from the 2022 drilling, last year we applied that same geometry to Homestake Silver, which is even more widely spaced. So Homestake Silver does have a gold zone. There's about 100,000 ounces of gold in the old MRE in the gold zone, and then about 18 million ounces of silver defined here. And so there were some results from 2010 that were high grade, nice and wide. We applied that same directional of that plunge. Here it's a little shallower than what I was showing at Wolf. That's mainly due to the orientation of these structures being pretty much 90 degrees to the Wolf structure. And you can see we're defining some very wide intervals here, up to 90 meters core width. So true width might be about 50 meters, but that's still a very wide intercept. Again, made up of a series of pulses of these breccias, and again, you see some very high grade. These are silver equivalents, so but it's only based on precious metals, so it's only the gold and only the silver combined. This is about half gold and half silver in terms of the value. And then when we projected that further, we had a few holes here off the north end of Homestake Silver, and we intercepted a new type of mineralization down here at this is on this projection, but again, because we're looking at a long section here, it's a little closer to us, and we had some quartz carbonate veining, which is different than that silica breccia I was talking about that makes up the mineralization Homestake Main, Homestake Silver, and within that quartz carbonate vein, we had 1,300 grams per ton gold with almost 800 grams per ton silver over half a meter. So that was a half-meter vein with beautiful visible gold in it, and then there was a series of stockworks. Some were a centimeter wide, but again, we always try and look at those wider intervals, and so there was that stockwork interval was about 12 meters wide, and it includes this high grade, but it averages 80 grams per ton gold over that 12 meters. So that's something that we'll be following up in the 2024 drilling, is see which direction that goes, because again, that oriented core helped us because we could get the true measurements of those veins, and it looks like they're coming across at a different angle than the main Homestake Silver. So we're seeing it as a different style of mineralization, and it is younger. It cross cuts everything. So we're excited to get down there and test that out.
So after this drilling season, do you think you will know if Homestake Main and Homestake Silver connects?
Yeah, we do have a 3 holes planned on this projection. You can see here there's a number of old holes. These are from 2003 and 2010. Agnico Eagle drilled up here. Bravo drilled here. But if you're outside of this high grade plunge, so these holes are below the plunge from Main and above the plunge from Silver. So we do think that there is, we have some numbers showing up in some of those deeper holes. We do think that there is a connection between Silver and Main, and we will answer that question this year as well, because besides testing this, we will also be continuing along that plunge. So, in terms of plan view, they pretty much line up. Silver is starting to roll over a little bit, so that connection, I think, is there.
Homestake Silver and Homestake Main, what's the average true width, do you think? And also average grade, or from what you know?
At Homestake Main, there was a historic PA done on Homestake Ridge before we acquired it. That PA is now historic, so we can't really refer to it because now the project has changed, and so all the economics has changed, and we have to start over again. But at the time, the mining method was going after these narrower fluid pathways, so more traditional mining where you're following these narrow pathways. So by switching it over to a wider interval, we're bringing the grade down, but we're making the intervals wider. So the definition of this core is probably 5 to 15 meters wide. Within that, you'll have 2 or 3 of these high grade intervals. And so our width, I would say, is 2 to 5 meters wide. And then the vertical extent of it is looking to be about 50 to 75 meters right now. And then we've got it defined over 300 meters length. That's at Homestake Main. And then Homestake Silver, we're still...
the average grade for Homestake Main?
That's about 7 grams per ton gold.
Okay. And at Homestake Silver?
Homestake Silver, we're just finishing off the modeling on that. I think Homestake Silver, because it's a lot wider spaced, these types of numbers is what we want to define in this year's drilling. If this plunge is continuous, but this is about, I think it's about 100 meters vertical, just based on these 6 holes. There's 3 listed here, but there's another 3 within that, 100 meters vertical. So it's wider than Homestake Main, vertically it's wider. And it's also, if you're taking a number of these veins, wider than Homestake Main. So right now it's looking to be anywhere from 5 to 50 meters.
You have extremely high grade intercepts over narrow widths. That's some case here. Is there a certain nugget effect?
Yes, yeah, and we see it at Wolf. I would call it more of a I guess erratic grade distribution than nugget effect, and that's a function of, and this is why we're targeting these wider and wider areas where it's opened up, because I guess the nugget effect is these higher grade breccias that come up. That's what you see here. Those are the high grade numbers. If you try and follow these 30 centimeter, 50 centimeter systems, you can do it, but then you have dilution, because you need a 2-meter tunnel to get at it. So that's why we report these wide intervals, because we want to take a number of these high grade nuggets, I guess, in that terminology, and blend it all into one over that wide width. So if you're using bulk underground mining methods, you're taking out 10, 20 meter wide stopes. And so it blends the ore, and that's why the average grade, as long as it's above 300 to 400 grams per ton silver equivalent or silver, or the 7 grams gold, then we can take that width out. So it basically, by using that method, you're blending the nuggets, and that way you don't have to worry about it.
So then if we talk about, if we move to the regional exploration program, are there any targets that you're particularly excited about?
Yeah, I'm excited about Moose, because it is along that same, interval, and it is what I consider a basin bounding structure, and we do have that one intercept into it. So I'm excited to test the theory that it continues underneath the sedimentary cap like Wolf does. And then there's regionally, on the western side of the valley, the gold is mainly at Homestake Main, but there is what we call the gold belt, which is anomalous in gold from surface soil samples all the way down to Red Point. Red Point is a predominantly gold target, and this whole belt is very strongly altered, and so we have some holes planned around Red Point, following up on some 7 to 10 grams over 20 to 50 centimeter hits. And what we're trying to do there, it's a different style of mineralization. It's a very intense stock work within a higher temperature quartz sericite pyrite alteration zone, which runs, again, this full 10 kilometers from Homestake down to Red Point. And we do have some holes from 2021 that have 300 meters of 0.17 grams per ton gold. So that's a significant width. It's not an economic grade, but it shows that there's gold in the system. And then within that hole, wherever there was an increase in stock work, then you could start looking at something that's sort of more bulk mineable. So within that trend, we're looking for areas that the structure has prepared the rock to have more intense stock work. And that's one of the reasons that we postulate that there might be a buried intrusive of similar style as Big Bulk out to the west here, because the alteration assemblage and the mineralization and the stock work are indicative of being close to another porphyry system.
How does the grade-tonnage curve look for you? I mean, if you would raise the cutoff grade from 150 to 250 grams per ton of silver equivalent, how much how much would the grade increase firstly, and how much would the number of ounces decrease?
All those sensitivity tables were done on the last resource. It would bring the grade up, but it would also, right now at 150 gram per ton silver cutoff, our average grade of our resource is 300 grams per ton. And if we upped our cutoff to 250, it's going to increase the average grade to, in the neighborhood of 400, but obviously it'll bring our number of tons down. And so, again, with that theory of going after the taking all of those high grade intervals and then the mineralization in between and blending that into a wider interval, that's how we keep our cutoff low. And then, yes, our average grade is lower than if you up your cutoff, but we bring in more tons. So you bring more metal into the overall endowment of the MRE.
So in other words, really, high grading this deposit isn't really because you will be mining wide widths.
Exactly.
So it's that makes more sense. Could this be an analog to Greens Creek from Hecla's deposits? I know it varies because Homestake's main isn't the same as Wolf, but still.
It is variable, but that's why Hecla, I think, is they are a 15%. Just go up here quickly. Hecla is a 15% shareholder. They have been over 10% since 2012. They see the same opportunity here. This is not just a couple of little deposits, silver deposits. It's now, we're showing that this whole valley is part of a large trend. So they see it as a regional play. If you include the intrusives, and then just jumping around here a little bit, but you can see here they have this whole rest of this land package, which is almost 3 times the size of what we have, and so they see this as a regional play as well, in terms of and it is an analogy to Greens Creek. That's one of the reasons they're here. Besides the fact that it's a regional play, I didn't mention earlier, but this is we have all the same aspects, all the same types of mineralization in our what we call a sub-basin of the Assay Rift, down at the southern end of the Golden Triangle. So just down here, we have all the same styles of mineralization, like the big bulk. Torbrit is volcanogenic, same age as Assay. The veining at Homestake looks similar to what we see at Brucejack, that new veining that we discovered. So they are really getting more involved. They've upped their interest to 15% now. Just before the new year, they gave us $10 million to do more exploration. We work closely with them. Kurt Allen is their VP exploration. He goes to Greens Creek often, and from what he says, there's a lot of similarities between Greens Creek and the mineralization of Dolly Varden.
Where are you starting?
We're starting at Wolf, and Wolf here, and then Chance. We have some veining that we drilled in 2019 that still needed some follow-up. Back then we didn't have as much structural knowledge, so we have some, I think it was 24 meters of 450 gram average around the Chance area, and then we drilled underneath it and it wasn't there. But now with this new knowledge that we've developed at Wolf and at Maine, we now realize that perhaps it's plunging off. So if you drill below a high grade hit, you might not hit it, but if you go off to the side, so we'll apply that structural knowledge at Chance and hopefully one of those shoots exists there as well. And and Wolf will get started on that step outs up the hill. The directional drilling will start in another few weeks.
Fantastic. And so when will the first batch of assays come out?
Well, we usually wait till we have a number of holes. So before we get anything back, it's usually about 4 weeks from delivery time to the lab, 3 to 4 weeks at the beginning of the season. But we'll do about 3 weeks of drilling before we have enough holes together to send in. So I'd be saying, by the end of June, middle of July, we should be starting to get our first results in.
I mean, your current mineral resource estimate is based on data that's up to 2019. So the resource has obviously grown a lot since then. Would you like to give a ballpark, just a ballpark range of your resource size in silver equivalent ounces?
Look, I'll say this. If the resource has grown to 200 million ounces, okay, we're currently at around 150. If the resource has grown to 200, what you're envisioning there is a company that have the ability to produce 10 million ounces a year for the next 2 decades, which would be an incredible value proposition for an acquiring company, for a future miner. And if you consider the grade, let's try to look for analogous projects. If you look north of us, in just outside of Juneau, Alaska, is a project called Greens Creek that is run by Hecla. It's the crown jewel of the Hecla portfolio. Our grades are similar to Greens Creek, actually slightly better. And so if we could have grades that are similar, we're going to have costs that are similar. And making those assumptions, this is going to be an incredible potential future mine or reawakening of past mines in terms of the Dolly Varden project and then the newly acquired Homestake.
Super. So then, what metallurgical work has been done?
So, one of the things that we benefit from being a past producers, we have all the old production logs. It's particularly from the Torbrit mine. It produced for 10 consecutive years. And so we've got the production logs. We did some modern metallurgical studying in 2019, and we published those findings. We had silver recoveries in and around 88%, which is extremely high. And then on the gold side, similar work was done and published at Homestake, where the gold recoveries were better than 90%. So the next step is to see what happens when we blend the two ores together, and those results are pending.
How are you thinking in terms of putting out a resource and also doing a following PAA?
Yeah, what I'd like to do is I'd like to go out and conclude the drill program this year, and we just don't know what extent that's going to be. We've got this initial phase 1 of 25,000 meters, but upon success, that could grow. So let's envision drilling ending at the end of October, and then assays and whatnot coming from as early as June all the way through to February. And so if we're ending assay reporting in February, we'll take that material. It'll probably take us a couple of months to put it together into a new estimate. And so maybe we're looking at May of 2025 with a new resource estimate. And then, within 60, 90 days, we'll put some economics around that in a preliminary economic assessment.
So you already mentioned that your relations with the Nisga'a First Nation. Is the Kitsault Valley entirely on their property or their territory?
So the Kitsault Valley is entirely on Nisga'a ground. Now in December, we acquired a property that's just a few kilometers away called Big Bulk. So it's a copper gold porphyry system that Anglo had last drilled in and around 2009, and it's a fertile porphyry. And with some very, very high grade veins at surface. That Big Bulk is surrounded by Hecla and then adjoins the Hecla ground and a string of porphyries, both on our Kitsault Valley package and that go over to the Hecla ground. That is on the traditional territories of the Gitniau. So to answer your question, Kitsault Valley, 100% Nisga'a. Big Bulk is on the territory of the Gitniau.
And how are your relations with the Gitniau First Nation?
They're a great group, very straightforward, and we just had some recent communications with them. So very positive.
And so there's no need to say Hecla is obviously interested in you in Kitsault Valley, and we will come back to Hecla, but in a minute. But what other types of companies are interested in approaching you? Type of companies.
So look, there was a very small list of maybe 30 companies when I first came in that I could talk to, because what we were was a 40 million ounce pure silver mine. And what's changed in the recent years is, the metal price, the discoveries, But bringing in Homestake, which brings in a silver gold and a large gold component, has now opened the company up to a much broader audience than just the pure silver miners, which are the gold miners as well. So there is, from companies that are trading as high as a $30 billion valuation down to companies that are just a few $1 billion. We've had a lot of interest. We've signed a lot of confidentiality agreements. And, but, I'm of the belief that, I don't necessarily think that we're just going to be prey. We may be predator in that there, like when we bought Homestake, there are some other accretive regional opportunities that I think, for me to get to that $1 billion valuation, we can potentially do it through organic exploration growth. But, the fastest way to do that, in addition to building, is to buy. And, that we saw that transformation occur from Dolly when we did the Homestake transaction in 2022. And, I'm monitoring a lot of opportunities, and we do have a competitive advantage in that we've got a currency. We've got a great reputation in terms of our scientists and the way we have managed programs, both from a safety standard and from a cost standard. And so there's a lot of groups that are approaching us to take on their projects. But ultimately, to answer your question, there isn't a company in today's world that is operating in a jurisdiction, like West Africa or South America, that is in open or isn't being mandated by their board to get Canadian centric. Canada, I think is head and shoulders above even other great jurisdictions like the US and like Australia. We've got, not only such a prospective, prospective country, but from a regulating standpoint, whether it's in and the tax standpoint, whether it's Quebec, whether it's Ontario, throughout the Maritimes, Yukon, BC, this is one of the greatest countries in the world for mining.
I think we should clarify this. Are you advancing Kitsault Valley in order to be, at some point in the future, able to sell it? Or are you considering, or is your intention to perhaps actually advance it through the development stage?
Well, listen, I think those who try to sell things and put themselves up for sale don't get sold. So the way to sell yourself is to grow. And so my answer to you is my strategy. If you go back to day one, we were trading at 37.5 cents in the ground. We had 44 million ounces. My thinking was in the future, we were going to get dollars an ounce, not pennies for our silver, dollars. And how many ounces could I put in inventory? Now, if we get into an environment where I can put together a package to take this into production and our equity shareholders benefit, we'll do that. I've done it multiple times in my career. I'll do it again. But if we get a bid from a producer that has the expertise, the cash flow, and we're not getting pushed out of the precious metals trade, like I'm here because I think gold and silver prices are going higher. If Dolly Varden gets bought out tomorrow, I still think gold and silver prices are going higher. So I would look for a vehicle that I can ride into the bull market. So to answer your question, I'm not entrenched. We are here to do a good deal for our shareholders. And I think the best deal for our shareholders is a sale.
Let's speak about Hecla, which is your by far best suitor, since they are a silver-focused company. They have the currency, and they're also great operators in this. So what do you think could make a company like Hecla pull the trigger? I mean, are companies waiting for a resource? Probably not.
Listen, that's a great question. And I think for every company, it's different. And I think that, the one thing I can say about Hecla is this is one of the most impressive ideas, which is Hecla is the longest running issuer on the New York Stock Exchange. And really think about that for a moment. Think about all the fads and all the trends and all the, who was a great company 20, 30 years ago, who's a great company today. Hecla's still there. And so I wouldn't bet against Hecla. And you've got a CEO that's been at the helm for over 2 consistent decades. He has proven to be the last man standing, and growing at a time where his peers are struggling. So, for me, it all comes down to, if you're Franco-Nevada or you're Newmont, your cost to capital is lower than if you're a mid-tier or a developer, right? So Hecla might trade at 1.5 times net asset value, whereas Dolly Varden might trade at 0.9 times NAV. So even if a company like Hecla were to give us a 50% premium, it would still be accretive to acquire. So this makes good business sense. And if you're looking to grow, and I think one of the ambitions of Hecla is to be the first silver miner on the S&P 500, I would think that Hecla would need 6 or 7 Dolly Vardens to get there. Now, they've been acquisitive. They bought Alexco's Keno Hill, and they've made other acquisitions. But listen, I'm looking out for the other 85% of my shareholders, and we're here to grow. And I think we've worked extremely hard to build an incredible platform here, and we need to leverage that into growth. And that might be a sale, that might be a merger to bring on some cash flow so that we can come back and develop Kitsault organically. So we're a skilled group, like I mentioned. We've got there's about 50 professionals that are under the umbrella here that are vetting projects, looking at opportunities, speaking with groups that can finance through royalty, debt, equity, and ultimately it all comes down to, in every decision we make, is this the right decision for the shareholder? And my strategy over the last 4 years, as the price of silver's moved up, we've put equity money in the treasury. We haven't taken on any debt. When the price has pulled back, we've made acquisitions and we've reduced our spend. We've been in a position of strength, and I think if we continue to keep it simple and ask ourselves, is this in the best interest of our shareholders, and always operate from a position of strength, and I think we're going to continue to outperform our peers.
We've now arrived at the penultimate question, and that is about Dolly Varden's role as an acquirer. So, are you just looking at opportunities in Golden Triangle, or are you also looking at opportunities in elsewhere in the province or in other provinces?
Listen, the one thing I want to do is I want to keep silver centric, and keeping silver centric, we have to be open at looking outside of the Golden Triangle. And so, we are evaluating many, many opportunities, but, at the end of the day, we've only made one acquisition. And, I think the lowest cost way to grow this company today is with drilling.
Where do you envision Dolly Varden Silver in 2 years?
Oh, that's a great question. I envision, whether we're still Dolly Varden shares or that we're shares into a larger entity. Listen, in the stock market, whether you're Nike, whether you're Tesla, whether you're Dolly Varden, the market rewards growth. So if you're not growing, you're dying. And to answer your question, we're going to keep on growing in an accretive way, where I'm not here just to grow the market cap. The share price during a depression where the venture exchange is still sitting at levels that is lower than where it went to during the crash of 2008. During the GFC, the venture is still lower than it was during the GFC, and our share price is up almost 700%. So I'm interested in growth, and I would suspect that we're going to continue to see growth.